Well, it's kind of interesting from the macro perspective. If they lose the House and they keep the Senate, what you get is gridlock. There'll be no more spending bills for the next 2 years because there'll be nothing done in Washington in that situation, which is good for the markets, for the equity markets. Remarkably, it's kind of indifferent for Bitcoin and crypto because what you find in all of these bills is bipartisan support, which is really something else. You look at Haggerty and Gillibrand, that's their bill, which contemplates Bitcoin as a commodity, and it deals with NFTs and lots of others. But there's 21 bills floating around the Senate and the Hill, and they're all bipartisan. So it doesn't really matter what happens. The only reason there's no crypto policy is everybody's focused on November 8th. But when they sit again in the back end of the year and they come back from holiday, they're still supporting crypto. Both parties like the idea of some regulation on crypto. So it's more about the gridlock of getting no more spending bills that the market may like, because most of market participants have seen enough spending. I mean, it's just, we did the $6 trillion, and then we did the Anti-Inflation Act, which was very inflationary, and then we gave the students back all their debt, which is nuts. And so everybody's sick of the spending. I think that's the opportunity for equities. Doesn't really change the outcome of Bitcoin. That will one day be regulated. Let me suggest a different reason to start going long Bitcoin, which has nothing to do with foreign currencies, but a lot to do with policy in the United States. There's two bills floating around, but let's talk about the one that has the chance of actually getting passed in the US after November 8th, which is the midterm elections. It almost went to markup last week. It's called the Stablecoin Transparency Act. Now, this has nothing to do with Bitcoin, but it has a lot to do with the tone of regulation. And the reason I think it's interesting is they're trying to solve for the challenges that occurred in these collapses of stablecoins that were built around algorithms. 62 billion got erased. The regulators got upset about that, although the majority of that capital, because it was decentralized, was in other countries. But this act is very simple in nature, which is why it may pass. It's being supported by both parties. And the reason that's the case is that it makes effectively the US dollar the default payment system worldwide, which everybody can get behind. So if you have USDC or any other stablecoin that's backed by the dollar, and the test to get it regulated is very simple. You're going to get audited every 30 days. It has to be backed up 1-to-1 with a dollar or a treasury bill. All the treasury bills backing the coin or the token have to have a duration of less than 12 months. And if you're willing to go through that scrutiny, they'll issue you a license. Now, if that were to happen, and it may happen very quickly after November 8th if the House flips, and that's the anticipation is House flips, nobody knows what's going to happen in the Senate, that's a coin toss. But even though it has nothing to do with Bitcoin, that'll be the first regulation passed by US regulators. And I would argue you want to be long Bitcoin going into that outcome. So if you own stable coins, you're going to see a lot of interest in institutional capital coming into, let's say, USDC and Circle. Circle, by the way, took in $200 million from Fidelity and $200 million from BlackRock a few weeks ago in a Series F at a $9 billion valuation. They got $54 billion of coin. So end of the day, regulation comes, Bitcoin goes up. And I agree with your thesis that it's a good asset to have if you're in a country where your currency is collapsing. But if institutions smell policy, then you've got a real move up. And that's when you break out of this $19,000 to $22,000 trading range against the US dollar. I think it goes right through that very quickly. Here's a question for every investor to think about. There's a risk in investing in Bitcoin and all crypto. There's also a risk of not investing in it, because if it's true that it becomes the 12th sector of the S&P in the next decade, some of the value in financial services stocks like banks, like money center banks, are going to transfer to these new technologies, and you simply don't know when that's going to happen. So my thesis is you should have some crypto in your portfolio because you don't know when that's going to occur. And if you completely don't have exposure to it, you may miss participating in the growth of this 12th sector of the S&P, which would be a bad outcome for performance.
How much of your portfolio is currently in crypto?
It was 20% before the correction. It's now 16.2. We monitor it every day, just like we do stocks. We're having a very hard time with our auditors and internal compliance people because it doesn't act like an equity. It doesn't act like a bond. It trades liquid 24 hours a day. So mark to market means nothing at 4:01 in the afternoon. So we're constantly monitoring that. But I'm not the only person that has this view. We are adding to that position because in the way we manage our operating company's portfolio, we can have any sector up to 20%, but no more than 5% in any one position. So given that, we have a lot of different positions, and we just put capital to work in Miston last week, that project that came out of Facebook. We're always looking for new projects because we simply don't know which ones are going to survive. But we don't need them all to survive. We just need a portion, just like venture investing. But crypto is going to cause a lot of disruption, in my view, in financial services, which is a large sector of the S&P. So if you don't invest in it, you also have the risk of missing that transition. We look at our positions, not just in Bitcoin and crypto, but across the portfolio. Fixed income has been as challenging as stocks. They've gone down just as much in the last 18 months. So it's been a very difficult time for every asset class. Regarding Bitcoin, though, our own operating procedure, we can't own more than 5% of the operating fund in Bitcoin. So we also have positions in ETH and Solana and all kinds of other, we're just looking at putting a position on in Pollen and Helium, which are really eclectic projects around decentralizing telco. But the whole point of this is that you just simply don't know when these asset classes are going to move. I have a personal speculation around regulation. I talked about that earlier, that if the Stablecoin Act gets put into law, that will be a signal that all crypto will be regulated at some point. Some people feel good about regulation, others don't. But here's a fact to consider regardless of your position. Most of the sovereign wealth funds that I work for as an indexer have zero position in crypto of any kind. When you ask them if they're going to buy anything, they want the granddaddy, which is Bitcoin. They're willing to put 50 basis points to 1% into Bitcoin when their compliance departments allow them to. And that won't happen until the SEC rules on it as a commodity or a security. And the reason they can't is that these sovereign wealth funds, I don't care if you're Norway or you're UAE or you're Saudi, the majority of their money is put into the S&P. It's the only market that can absorb $1 billion in one trade without moving the market. And that goes in around 10:05 every morning when these sovereign wealths take their 250 million that they make in oil each day out of New York. These transactions, remember, oil is transacted in US dollars, and they put it into an index of the S&P, X oil, X airlines, because they own their own airlines and they have enough oil, obviously. But the reason they won't buy Bitcoin is they can't go uncompliant with the SEC. That's the #1 depository for their capital. So until the SEC makes a ruling on what Bitcoin is, they won't participate. Now here's the upside. 50 basis points in the sovereign wealth and pension world is $1 trillion of buying. So you have to be voting and cheering on regulation. You put $1 trillion into Bitcoin, that's when you might see it at $60,000 to $100,000 valuation. And those funds don't care. Once they index it, they're the automatic bid when it dips below the 50 basis points or 1% they've decided to own, and they sell into strength. So there's a really, really liquid market about to happen. That's very optimistic for Bitcoin, not pessimistic. I really don't understand when people say, oh, I hate regulation in a decentralized asset. You want regulation because that's where the money is.